Hasan is a rice farmer from Sulawesi, a provincial island in Indonesia. With Indonesia as the third biggest rice producer, Hasan works long hours to meet daily quotas. However, his daily wage of $4 has become insufficient for his family's needs. He dreams to expand his farm operations, but has no capital to do so. As he tried loaning from traditional banks, his requests weren't approved due to his income bracket. Looking at his crops, he wonders if he will ever have the chance for a better life. Hassan is only one out of millions of Indonesian farmers who are largely excluded from lending services. Only 5% of total lending goes to the sector, with almost none going directly to small farmers. However, today we present a financial transformation led by a revolutionary company that secures a brighter future for the underserved. Good day, we are Team Ateneo, and I'm Bianca Braza.
I'm Jan Ong.
I am Joella Kansunhi.
And I'm Ariel Ang.
And first, let us bring you to the country that pioneered inclusive finance, China. Like Indonesia, China had large unbanked sectors. This is the gap that the fintech market saw and strived to solve through mobile solutions. With a strong mobile-first culture and government support, the market grew 9 times in 2018 to $25.5 billion. While most fintech sectors saw constant growth, one sector, peer-to-peer lending, saw erratic ups and downs. Why? During its aggressive growth, millions of small-time transactions were barely regulated. This led to massive fraud schemes that cost investors billions, forcing the government to do an industry crackdown. By the end of 2019, only 456 P2P firms remained, with the government striving to eradicate all by 2021. Now let's look at the remaining leader among these P2P firms, Finvolution. Finvolution was the first P2P platform in China who decided to push forward inclusive finance, providing loans to help better living conditions. It aimed to be the Amazon of financing, offering both BTC and B2B solutions. In line with regulatory requirements, it has transformed its focus from P2P to I2P, where institutions are connected to borrowers. Now, what makes Finvolution so successful, having survived the wipeout? We see its key strength in its ability to leverage technology in two major success areas. First, risk management. This area is extremely vital to a fintech company's survival, and Finvolution secures the safety of every touchpoint in technology. With its data-driven innovations like Magic Mirror, its processes have gained high credibility. Second, the customer service is superior. It provides borrowers with a credit decision within just 1 minute. It uses robots to assist its loan collection as well. This has garnered a whopping 98.5% satisfaction rate. However, with the increasing difficulty in the Chinese landscape, a domestic strategy for Finvolution is not enough. We agree with the company's move to pursue opportunities in Southeast Asia, given a large underbanked population, steep fintech growth, and mobile usage. Zooming in on Indonesia, we find that it has the highest potential for the company, given three main characteristics. First, its unique economic potential found in its large population. 60% of its 270 million population is within the working class age, showing potential for higher productivity. Second, weak financial inclusion and literacy. 92 million remain unbanked, and the national literacy rate is only around 50%. And lastly, active government support. Given the potential economic uplift from fintech, the government actively nurtures the industry through the Financial Services Authority. Now, what will unlock Indonesia's economic potential? We answer, financing its people through loans. According to PwC, a low percentage of loan disbursements to GDP indicates unutilized financial capacity. Currently, 74% of MSMEs don't have access to credit, with the national credit gap at $57 billion. With this need of MSMEs, we see the peer-to-peer lending market to be a vital enabler of loan disbursement and essentially economic growth. The peer-to-peer lending market saw 642% growth in 2018 and is expected to triple in size by 2024. However, despite this growth, Indonesian consumers still lack full trust and are not satisfied with current P2P services, with 64% of reviews of P2P apps negative. They find three main difficulties: slow fund transfer, hard debt collection, and lastly, difficulty in registering. Thus, we see great potential for Finvolution as it could utilize its key expertise in technology to solve Indonesia's pain points. Now, I'll pass it on to Jan to discuss their key issues and problems.
Given the attractive opportunity Bianca has discussed, How can Finvolution successfully penetrate the Indonesian market to propel its international growth strategy? We believe that Indonesia is an essential entry point to the ASEAN market. Now we'll be discussing some key issues Finvolution must address in our strategy. First, what strengths should Finvolution leverage on for its international growth strategy? On the right, you can see that the company is largely successful in its home base in China. It has over 108 million users and 18 million borrowers. Now it's important to understand why the company has been so successful and what part of its strengths can we actually scale internationally. Now let's discuss the said strengths and some alternatives. First, the company advocates for fintech empowerment with its B2B services rooted in tech. It has proven to have large tech capabilities with its use of AI data for smart customer services and its highly developed risk management, capital allocation, and anti-fraud system. We believe that the company must localize these tech capabilities in Indonesia to be able to provide a trusting service, which is essential for the Indonesian market. Second, its B2C service comprises of installment loans and microloans. We believe that the company should stick to these core services of instead of expanding further to e-payments, insurances, and other fintech services. Why? Because loans are its current expertise and a niche service gives us enough flexibility to partner with other fintech companies. Additionally, as Bianca has mentioned earlier, the real problem we see in Indonesia really lies in the access of loans for underserved communities. Lastly, we believe that its strategy of building partnerships, such as with banks and universities, have helped with its success. Thus, it should leverage a similar strategy upon market entry instead of acquisitions or joint ventures, given the cultural and management issues this may present. For the second key issue, how should Finvolution adapt its services to the new market? To be able to answer this, we need to discuss the Indonesian market a little more. As Bianca mentioned, it has a unique economic potential given its large working age population and number of smartphone users. The government is also pushing for financial inclusion that is trying to balance customer protection and innovation. However, financial literacy and lack of trust are huge barriers which have resulted to a high unbanked population. With this, we want to adapt services to promote financial education and trust. First, we plan to use both Finvolution's B2B and B2C services as the B2B model has potential in building trust and transparency through data. Second, we acknowledge the importance of partnerships, which is why we want to partner with fintech companies to speed up our market penetration, banks such as Jaya Raya and Bank BTN who focus on MSME loans to provide our services to, and key stakeholders like the government, village centers, telco, and insurance companies to grow our network of available data. In return, we are offering our IT expertise and experience to our partners. Lastly, we plan on focusing on online channels. However, to reach rural areas, it is essential to help develop infrastructural needs for villages to access our services. Thus, we want to explore building fintech centers in rural areas. For our last key issue, we want to discuss where should Finvolution scale its strategy next? As mentioned, Indonesia is only one stepping stone in our grand vision for Finvolution. With its large success in China and entry in Indonesia, Finvolution will need a roadmap of its international expansion strategy in Southeast Asia. In assessing which country it should look into next, we consider the regulatory framework, market size based on population and internet penetration rate, and banking opportunities left. We found that the Philippines is the next most attractive opportunity given a more favorable regulatory framework, its huge population, and number of people underserved. Vietnam's regulatory framework is yet to be established till 2025, and Singapore is already a highly advanced market, and even if its internet penetration is the highest, it has the smallest population. Given all this, let's talk about where we plan to take Finvolution. Right now, it is an expert in China and has no international presence yet. Its next growth opportunity really lies in the international market. Thus, we envision Finvolution to be the largest lender in the ASEAN market. And beyond growth and profits, we believe that as an international company, Finvolution should be a catalyst of social impact through financial inclusion. Now, how can we get from our current state to our ideal state? I'll pass it on to Joella, who will tell you more about our strategy.
Thank you, Jan. Our strategy is about unlocking Indonesia's economic potential through financial inclusion. This is our first step towards the internationalization of the company. As a country, Indonesia has unique economic potential, but access to financing is a huge barrier for the country. By focusing on providing financial inclusion through our extensive tech capabilities, we introduce to you the Lend strategy, which can help us one day become the biggest lender in the ASEAN market. Our two main goals for the LEND strategy is to become the largest leader in Southeast Asia and to drive financial inclusion in the region. E and N will take 3 years to fully implement, while D goes beyond. Now, to present our big idea, FIDEA, the lending hand you need. FIDA is our localized mobile application, which is a catalyst for financial literacy and a place where customers can access our services. FIDA means benefit, referring to benefits beyond the materials. When something has FIDA, it is a real value that can be measured up in its own purpose of being rather than just the material profits it brings. Our localized services hopes to bring users financial management tools, loans, and customer services that ultimately benefit them beyond profits to achieve a better quality of life. But how do we adopt FIDA in the first place? Well, the first part of the consumer journey is literacy formation, which is educating people on the importance of financial management. This is essential to grow our services adoption rate and work towards our goal of inclusive finance. First, for rural communities, FIDA can partner with the government and with NGOs for on-site educational efforts. The company and government both want what is best for Indonesia's economy and growth. Thus, Finvolution can leverage the shared goal for a push for financial literacy by working with the government to integrate financial management to the rural school curriculum and together developing infrastructure needs in rural communities for fintech services. On top of this, they can endorse our application that has in-app educational efforts. Next, for MSMEs, FIDEA can partner with NGOs to offer entrepreneurship, microfinance training, and they could even have events in village centers to offer this to people in rural communities as well. Last, FIDEA can create educational campaigns by having advertisements within partner apps that link back to their service. They can also create in-app tailored-based financial literacy suggestions depending on the user's activity and profile. Now, Ari will discuss the impact.
Thank you, Joella. Now, under literacy formation in the leftmost column, there are 4 parts, and these parts all work together to bring increased financial literacy to our targets. And as we bring our enabling financial services to our customers, we'll see an increase in the number of people served. And this brings us closer to our goal, as mentioned by Jan, about driving financial inclusion, especially in the underserved areas. And at the same time, this also increases our market penetration. And in terms of feasibility, under this section, we see a positive net incremental benefit of 271.4 million US dollars. And it's quite high because we accounted for the additional revenues from increased adoption over the years. And back to you, Joella.
Now, next part of the consumer journey is ecosystem integration, which builds up on the first part of our strategy by focusing on making the loan channels accessible to the newly educated through an integrated and localized FinLife ecosystem to increase adoption through widely used platforms. This will be done by first establishing a localized management structure for the subsidiary. Before we build the ecosystem, we need to employ local management with a stronger grasp of the local landscape to gain consumer trust. Indonesians believe that locally managed companies understand them better. Next, we will be pushing 2 main financial products tailored to the market, which are 1, loans, due to the big market needs, and 2, savings, because of how it can support people starting their financial literacy journey. These products will be pushed on the ecosystem, built through strategic partnerships that help enhance our localization strategy. Korea can partner with traditional banks Jaya Raya and Bank BTN to provide funds for loans and offer them IT solutions as well. Then, we can partner with technology companies that Indonesians widely consume and trust. Examples being Gojek, who owns the largest e-wallet, and Tokopedia, the largest online marketplace. We see mutual benefits given that they currently lack sufficient loan provision services and we lack the exposure to the local market. With the partnership, we can also facilitate loan disbursements to make users of their app spend more with higher capital in their pockets. Now, the crucial part of our ecosystem lies in rural establishments, such as village centers, to build fintech infrastructures and understand their needs, such as lack of Wi-Fi connectivity and more, and 2, agricultural supply chain establishments for farmers to have more access to tools for their businesses and personal finances. We will partner with them to truly reach the underserved segments in Indonesia. Now, passing it back to Ari.
Thank you, Joella. Next, the ecosystem integration section of our strategy focuses on positioning Fadea properly in terms of its offerings towards the Indonesian consumer. So from it, we'll see an increase in the service fees and also increased brand equity from localization. And by choosing the right products to sell to the customer, will bring revenue growth for Finvolution. And moving on to cost benefits, this section brings to us a positive net incremental benefit of 30 million US dollars. Back to you, Joella.
Now, the last part of the consumer journey is network building, which looks at how consumers experience the service and finish their transactions. For our service to be successful, we need to build an extensive network of data for our B2B model. This will allow greater trust and transparency with our services. This will be done by investing in more technology to hit past consumer pain points. We will increase security to increase trust through decentralized blockchain ledgers that provide accurate, safe, and real-time tracking. And we will offer business solutions for MSMEs and personal solutions for local clients, even those beyond the rural areas, using machine learning and artificial intelligence to understand and further predict behavior. Both will be offered contextualized financial management insights and tailor-fitted dashboards based on their user activities. Next, the network effect will be strengthened by creating a strong digital ecosystem for this IT-based fintech company. We want to partner with governments, village centers, insurance companies, and so on for bills to access more data we can use to enhance the accuracy and the speed of our services. Now passing it back to Ari.
Thank you. So for the third section, we'll see increased trust and increased revenue growth as well from IT services, as well as better tech capabilities. And this brings us much closer to our goal of having stronger consumer trust as well as a secured market position. And here we see a net incremental loss of $205.8 million, but this is spread over the years as Finvolution invests more into its technology, building foundations to support further growth.
For the last part of our recommendations, we want to discuss Finvolution's next developments in its international expansion strategy. First, from a P2P lending platform, Finvolution will need to start pivoting towards more institutions to peer lending. We believe that Indonesia may follow a similar regulatory framework as China to reduce risks on customer protection. Thus, pivoting towards an I2P will secure our Indonesian operations. Next, what can Revolution do? What's established in Indonesia? Earlier, we identified the Philippines as a next step. The company can play a huge role in unlocking the economy's potential by providing loan opportunities for the underserved. Given its extensive tech capabilities and history, many institutions will want to partner with Finvolution to pioneer such technologies. By targeting the Philippines, which has a huge population and internet penetration, Finvolution will be on its way to becoming the biggest lender in the ASEAN market in no time.
So moving on to financial and operational impact, on the upper bar chart, we project that through our lend strategy, Finvolution will be well positioned to capture loan growth and can reach a loan origination volume of $5,722 million. Consequently, looking in the chart below, we see that Finvolution's top line will greatly benefit from this as they can earn up to $400 million from facilitating these loans. And because of our goal to drive financial inclusion from our sustained efforts, we hope to be able to bring financial services to at least 24% of underbanked individuals in Indonesia in just 3 years. And connected to that, we aim to reach 13.3 million users, bringing us closer to our goal of becoming a market leader in the ASEAN region. And overall, this strategy's net benefit is 95.6 million US dollars.
With a goal for financial inclusion, our strategy affects many stakeholders. The first ones being rural communities as they gain financial literacy and get access to service. Second, local SMEs as they get support while they grow their businesses. And third, local users as they are empowered to be smarter with their finances through database and safe technologies. With all of this, we recognize that our strategy comes with risks. We have identified 5 risks, for the highest ones being execution and industry risk. The execution risk is a low adoption of our services in Indonesia, which would be mitigated by customer acquisition in rural areas as well as digital tie-ins to reach the average consumer.
With this monumental step towards inclusive finance, farmers like Hassan can gain access to dreams of farm expansion and better futures. With the land strategy, we see Finvolution becoming the biggest lender in Southeast Asia, unlocking the economic potential of countries all over the region. Thank you, and we are now ready for your questions.
Thank you for your presentation. It's Now time for the Q&A session. The 15-minute countdown starts now. May we hear the first question, please?
Let me go first. Can you go back to that risk analysis slide? Because I think you just managed to talk about the first execution risk and not much on the others. So can you expand a little bit on the risk, that you have put onto the slide?
Definitely. So other risks that we find are industry risks, where the company should adjust to varying countries' regulations by working with the government to be able to be quick on adjusting to new policies and how they do their fintech services. And the other three risks, which have a less probability of affecting the businesses, are operational risks from cybersecurity, which will be fixed through our fintech technologies such as blockchain, AI, and so on. Operational risks, where they might have the lack of historical credit activity since they're new in Indonesia, but we mitigated this through our partnerships with other parts of Indonesia, as well as using the current data that we have from China. And third is competition risk, where there's really an oversaturation of fintechs in ASEAN, but we will compensate through this by really increasing our marketing efforts and customer acquisition and focusing on our highlighting our reputation on being safe and being the first movers in some areas.
Okay, thank you.
So I'll go next. What are the key assumptions that you have in terms of consumer behaviors?
Okay. First, looking at the consumer profile of those who are currently using P2P services in Indonesia. Currently, they're avid mobile users, given the high mobile penetration in Indonesia. However, we saw that they saw three main struggles in their use of P2P. First, they had problems with the slow fund transfer, so they weren't very satisfied with the current speed of the services. Second, they had a low trust in fintech, given that they had problems in the disbursement processes. And lastly, they also experienced some difficulty in registering from the very start. So given all of these assumptions about the Indonesian consumer, we believe that we can really address their pain points through the tech expertise that the company has.
Can you elaborate a bit more on the penetration aspect when you looked at the customer profiles and the interchanges? How did you conclude on the present assessment of the penetration aspect?
Thank you for the question. So, are you asking about how we evaluated the penetration?
That's right.
Okay, so we took the penetration rate from current sources online, which said that there were 92 million underbanked individuals in Indonesia. But in terms of the penetration rate that we wanted to bring with our strategy, in terms of its impact impact on that space, what we based this on our focus on really pushing towards the rural areas.
So what makes you feel that there will not be sufficient similar Finvolution in Indonesia who will try and capture their market?
So right now, we believe that our main strength is really in our tech capabilities. And with the tech capabilities, we'll really be able to get great partnerships that will help us really push for our services more and create a wider reach. Currently, there are existing P2P lending companies in Indonesia. However, they failed to really dominate or capture very large markets because they do lack a bit of tech capabilities that we believe we can really bring into, especially with our experience in China.
Yes, and to add on to my teammate's answer, Finvolution actually experienced the entire industry life cycle back in China, giving them more historical experience in dealing with the P2P lending market. They can bring this experience and expertise to the Indonesian market. Thank you.
Okay. I want to ask a further question about the finance part, right? So that I noted that there's actually about 200 million cost on the IT spend under the network building. So are they the key dependency, and then how did the numbers stick out, and whom or which local partnerships do you see as a critical piece that then we cannot leverage on what we have built in China?
So in terms of the costs that we estimated for this part, we acknowledge what we did was we included the number of years from which so this cost is distributed over the number of years for the strategy. But for this, we do note that for the company, in terms of IT capabilities, scaling towards another country and pushing forward with the localization strategy would entail certain costs, and we wanted to take note of this when we were estimating our costs.
Additionally, just to add to what Ariel said, for partnerships, we believe that the two main partnerships we need to be able to establish is Tokopedia. So another fintech company, it's actually a marketplace in Indonesia. And with them, we could actually have access to both buyers and sellers who might need loans in the future. And we do need, of course, the partnership with the government because our main strategy is really helping Indonesia develop its economic potential and really feel like with that shared vision, they'll be able to help us access other resources and really widen our reach.
I have a follow-up question. You have presented cost and benefit analysis for each of the aspects, of your strategy, and you have a summary of cost and benefit as well. Do they add up? Or, this is a projection, right? You have another slide that talks about the overall benefits as well.
Thank you for this. So for this part, we did take into account, we scaled our revenues in alignment also with the cost benefits that we assumed. So overall, the strategy would add at around 700 to 800 million US dollars in terms of revenues from the strategy. And this is what we took into account also when we were estimating our earnings. But overall, however, we do note that there will be a few discrepancies as these are quick estimates, and that these measures are more indicative of the direction which we want the costs and benefits to go towards from our strategy.
Okay.
And you mentioned the localization part. In terms of human resources, have we got any analysis to understand a bit better in terms of like the level of skill manpower required for us to be able to take this to a success in Indonesia?
Definitely. So what we plan to do for that is have the Chinese experts that worked on building it first in China train the Indonesian experts. We want Indonesian people that have the local understanding, but the parent company would definitely help them in terms of training. But we would also be employing people that have tech backgrounds or fintech or finance backgrounds just to make sure that the company is holistic with their expertise.
What percentage of your hire would be management people and versus the other operational staff than, for example, like for loan collection, etc.?
Sorry, what do you mean by what percentages for hire and what percentage? What was the last part? Sorry.
So in terms of your overall people strategy, right? I understand that you touch on the local management, and so there will be a good portion of your staff that needs to be hired locally for operational as well. Is it like what you're thinking in terms of your overall strategy, and how much dependency would that be in terms of like relying on local sales force or workforce that needs to be skilled?
Okay, thank you for the question. We will have around 10 to 20% local because most of it would still be automated since we are still a tech company and we really have like automated financial advisors using natural language processing to really understand the consumers and putting that into AI or machine learning algorithms. So the local staff would really just be in charge of maintaining that or doing a few more tasks that we may need manpower for.
Okay. I have one more question. I think your presentation focused very much on, how fintech company like Finvolution be able to bridge the gap. On making the loans accessible to the population, the large population right now that cannot be reached. What else do you think? I mean, why the local banks cannot do the same?
Sorry to clarify, you mean local traditional banks or
The traditional banks, the banks that right now operates in Indonesia. I mean, what makes them not possible to adopt the same or quickly catch up?
Okay. So I'll start, and if any of my teammates want to add. So first would be the need for infrastructure for traditional banks to actually reach these rural communities. So they would need a big scale to scale it big and need a high capital investment to be able to invest in fintech technology. So given this, we believe that Finvolution is actually ahead of the race, given their large tech expertise and expertise in the industry, given its first mover advantage in China. And given that they'll be also employing localization efforts, like understanding the market and also having partners that are already dominating the industry in other segments, then we can really capture and get a big network of data that we can use in our services that those traditional banks cannot harness given their lack of tech capability.
In addition to that, we want to highlight that traditional banks use the Pareto principle and really focusing on the upper people that already have money. Whereas with our technology and what we're looking for is really looking at those 80%, those farmers, those lower class workers that can't even afford to have high credit scores or that cannot find ways to understand how to manage their finances. So with that as well, we really want to focus on building our tech so that it could have financial inclusion for all and really assist everyone and empowering them through finances.
Okay, thank you.
And my final question is around the Philippines as a recommendation, because you mentioned a couple of times during the presentation, Philippines would be potentially the next country. So just throughout your analysis and how the team would suggest us if like Indonesia doesn't work, that we switch to Philippines, or like we should kind of like do both Indonesia and Philippines at the same time. What's your thinking in terms of like timeline, in terms of entering into the next market? And when you look at this assessment, what about other large population, high smartphone user penetration market like India? It wasn't really included in your analysis. Can you take us through that kind of like thinking and decision-making process?
All right, so I can take this question. So we chose the Philippines because we felt that it is a very high growth company that's already starting to really utilize e-commerce. The internet penetration and mobile consumption has been really rising. However, during the time of this case, which was 2019, it wasn't exactly at that rate yet. So we thought we should do Indonesia first, try out our services there, understand what we can do better with the localized team. And then after we finish Indonesia, that's when we can go to the Philippines. So if our Indonesian strategy is around 3 years, we felt that it would be the perfect time to go to the Philippines afterwards, wherein the e-commerce market, the fintech market is a little better. And when it comes to regulations, it was only quite recently in the Philippines that regulations for fintech has actually been a lot better because the government is really trying to push for cashless payments. So we feel like that would have been the perfect timeline. So for other countries, we did consider India as well, but we really wanted to focus in the ASEAN region first because we felt like this would have been a good potential place to dominate before really spreading out in other places.
Any last minute questions? Well, in that case, thank you, everyone. The judges will now stay in the room to deliberate.